This is the video lesson where I'll explain a little bit and give more informations why Forex traders fail. What is the root cause? Here you have an article I have written about this topic, and on the right side I have gold against US dollar on the 1 minute time frame on the MetaTrader 4 with the demo account with $8,000 on account balance, just to show you an examples during my explanations. Here are the topics I will cover, and I hope it will give you enough information to explain why Forex traders fail, what is the root cause. Now we can start with the starting and the explanations. Why Forex traders fail? Most of the time because of the fear and greed. They are greedy to make lots of money, which will lead them losing their account balance on your trading account very quickly. So there are no expectations, real expectations. There is no risk management. That means they are not having a proper stop loss set on each trade. When you open a new trade, you have a possibility to put a stop loss which represents acceptable loss when the trade goes against you. So for example, on a $10,000 account, if you have that, 1% will be $100, which is acceptable loss. So you put here a stop loss on the price that is equal to $100. Then you have here, thinking it is easy, is why Forex trade fail. Trading on the Forex, trading on any market is not easy. It takes lots of time, lots of discipline, being patient, having proper risk management, having trading plan with the trading strategy, and following that plan in the long run, and having a statistics and avoiding making the same mistakes. Now you have here heard what I have just said, how many things I have said, what is important to be successful, and why traders are failing. Now you can see unrealistic targets, goals and expectations, then not having discipline, patience, knowledge, experience, capital, then there is a fear, greed, hope, refusing to be wrong, not having trading plan, trading strategy, risk management, trading mentor, and the winner of the why Forex trader fail. You will see which one is that. You can see that it's already greed. The greed is most of the time emotions that will bring your account very quickly to zero because you want to make lots of money in several trades, which eventually leads you losing everything. Then you need to start over. Now let's start from the beginning. Thinking it is easy is the why the traders are fail, because they think when you start trading on the Forex, there are two ways. You need to define, will the price go up or it will go down. This is the 50% chance of success being correct. So how many times you will be correct if you open 10 trades? If you have 50% chance, it will be 5 of 10. But then if you have 5 profitable trades, how many of them has been in profit with how many money? Is 5 trades per each of $100, that means $500 of profit, and how much of those 5 trades that are bad trades with a loss, how much loss per trade was there? Was it $100, $50 or $200? If it is $200, that means you have lost $1,000 with a profit $500. Eventually you end up with $500 in loss totally when you add those two. So having a proper risk management is something that the traders need to do. And that is why Forex traders fail. They do not have proper risk management, which means you cannot lose $100 per trade and earn $50 per trade. This eventually will get your account completely wiped. You always need to target more profit compared to the loss. So if you put stop loss equal to $100, let's open the trade. For example, open buy order. And I will put here, sorry, I need to modify this order, 500 points. Okay, this is the way. And let's check these trade. I'll put them here and put this take profit right here so we can see much more clearly then. Here it is a stop loss, 180. I will put this one here so it is very close to 100. Just a minute, 150. That will be okay, and the take profit will be at very close to 200. Okay, what I mean, if you have a stop loss set to $100 here, the take profit should be at least double than that. That means $200. You cannot open a trade with, for example, here it is $50 of profit and $100 of loss. You can see that in the long run you will earn and have profit which is less than the loss you are accepting. So in the long run you will have more losses than profit, and you will lose money in the long run. So that is why you need to have a proper risk management, which means a stop loss should be less than the profit, and that the profit should be at least 2 against 1 or 3 against 3 against 1, which means risk to reward ratio. So risk should be 1, reward should be 2 or 3. This is also why forex traders are failing, because they do not have a proper risk management. Then they have unrealistic targets, goals and expectations. You cannot make money with $1,000 account, $500 per trade. No, that's not very good. Your expectations are not correct. You should try to get 2 or 3 or up to 5% per trade on your trading account balance. So if you have $10,000, $500 would be fine. With $1,000 account, you should aim to earn $50, $30 or $50 per trade, and having 1% of loss, which means on $10,000 a loss of 1% should be $100. This is the correct way of trading and also thinking with real expectations. What will be the goal? The goal should be to earn 10-20% per month. That will be also okay with the proper risk management and clean trading plan. Now there is why forex traders fail. There is discipline, patience, knowledge, experience, and capital. I have explained why you need to have a proper capital. If you have enough money on your trading account balance, for example, if you have $10,000 per trade, you can earn $500, which is just fine, and that is maybe something that you will be satisfied. If you are not satisfied, this will lead to greed that will force you to open more trades to be satisfied, and eventually that will lead your account being wiped out completely. Being disciplined and patient, that means following your trading rules, what they are saying. If your trading rules tells you if the market turns down below this support level, open sell order. If that happens, for example, open sell order. Second rule, your stop loss should be just above the highs, which means your stop loss should be right here. For example, let's put this one here. My stop loss should be right here, just above this. Where my take profit should be? It should be just right here where the next support is, in this case right here. Why is that? You can see the next support is right here where these are wicks and also these are wicks. So this is a discipline and being patient. Being patient is now wait for the trade to go in your direction. Do not open more trades, do not change the stop loss take profit level, because these are the trading rules that you are following, and they say to put this one here. That is mean being disciplined and being patient. Then having knowledge and experience. The knowledge is how to trade. What is your trading strategy? If you have a good knowledge, how to use trading platform, how to put the take profit and stop loss level, these are the knowledge that you need. If you do not have, use a trading mentor that will tell you, or learn on your own by reading the material on the internet. You have lots of the free material here on the Get No Trading website. Then you need to have a proper capital, and that means you need to have enough money to start trading. If you have $100 of your capital, remember that 1% will be your stop loss and up to $5 will be your take profit. So are you satisfied with such amount of profit and loss? If yes, then continue. If not, remember you need to find enough trading capital to start so you are satisfied with the profit. If not, this will lead you to overtrading, oversizing and losing money. What are the emotions? Psychological reasons: fear, hope and greed. This is something that most of the time, for example, the greed steps in this example. If my trade is moving in my direction, you can see I am currently in profit. I open another trade. Oh, let's go open more trades. Yeah, open more. Wow. This should go in my favor. Yeah, that's great. You can see 3 trades are in my favor, and that's great. I will earn lots of money, but the market can turn around, go against you. This can happen, and you need to protect yourself. This is overtrading. This is the greed. When you open more trades because you are greedy, you want to make even more money. Even though I have opened first trade based on my trading strategy, second and the third one I have not opened, and because you can see there is no stop loss, there is no take profit, and I have not entered at the right at here where this support is. I have opened that in between the take profit and the first open price. This is not based on my trading plan, so this is something that is called greed. Now there is also fear that steps in, and that means if the trade goes against me, now I'm fearing that this trade will go against me. So instead of waiting for the price to go in my favor and to make money, I simply close this one because it's in loss. I do not want this trade to go even in more loss, so I do not waste my money. I do not want to lose money. But eventually what happens? The price do not go against you, do not go up, but it goes down. And this something leaves you without the money you can earn on that trade. So this is the fear that tells you protect your account, do not allow the trade to go in against you. But usually what happens in the market, you can see how the market goes up and down, up and down, up and down. You need to allow for the price to go up and down. You need to have a space for the price. So this fear was not very good. There was no any ground to have fear that the price will go against you. If you have opened a trade with your trading plan, certain rules, follow it. If it go against you, you'll see and make the analysis why it has gone against you, because sometimes your trading plan is not 100% bulletproof. It will be bad and you will have failed orders. Refusing to be wrong, being wrong and moving your stop loss, and that means if you have a stop loss for sitting set here, well, I do not want to put that here. I do not want to have such great loss. I would like to reduce this one. So I will move my stop loss here. What happens then? The price goes against you and jumps around. You can see that and activates your stop loss. You get out from this trade with a loss instead of being incorrect. If you have followed your trading rules, the price will eventually go in your favor most of the time if you have a proper trading plan. This is something what means being wrong and moving your stop loss, refusing to be wrong. What happens then? If the price goes against you and being activate stop loss, you do not want to be wrong. You do not want stop loss being activated, so you're hoping that the price will go in your favor. Calm yourself, be patient, be disciplined, and follow your trading rules. If the stop loss is here, stop loss is here. If it is bad trade, it is bad trade. Accept that, move on. There will be more trades. Now you can see I have earned money with this trade, and I will close this one. So you can see I have earned lots of money with this trade because I have followed a trading strategy. This is one of the examples. Then having a poor risk management this is something what I have just said. You need to have a stop loss and take profit set. If not, you do not have them, there is no risk management. That's very bad. Then having a trading mentor is something that is very useful. A trading mentor will help you to learn from mistakes of other traders. He will speed up your learning process. He will show you something maybe you will not learn on your own for several years. And if you have possibility to learn from someone, learn everything you can, but do not blindly follow those steps. Learn on your own and test those steps. If they are okay, in line with your thinking, then follow them. If not, change, find your own trading rules and start trading on your certain steps, and later on make the analysis, is it profitable or not? If not, fix something what's not correct and improve your trading rules and your trading strategy. Then the winner of the why Forex trade is greed for money. Greed will step in trading and eventually will wipe out everything what you have earned, what you have learned, and what you have on your account balance. Greed will force you not to be patient, not to be disciplined, not following trading rules, not following trading plan, not following risk management, stop loss, take profit. The greed will wipe that eventually everything because of greed for money. You want to make money, that's normal, that's why you are trading, but being patient and being disciplined is the way to go, and leave your emotions out, especially greed. So this is something that you need to learn. If not by reading, then it will be from the experience. Experience will show you, but how to say that? You need to think about your ways, what you are doing, your steps, what you are doing, and get back in the past and fix those bad ones. Do not repeat the same process. You know how they say the history is the best teacher. So learn from your own mistakes, fix them, improve them, so you are much better in the future. I hope this has helped you to understand why Forex traders fail. What is the root cause? In my case, I think the greed is the root cause. I have explained and shown you more of them, what are possible reasons. If you have one of these reasons, feel free to share that inside the comment and tell me what is the main reason why do you fail in trading. So we can see what traders are, what is their most and biggest reason why they fail. Maybe you will learn and help other traders who are reading that and also who are watching this video. Feel free to share that. I will try to answer as soon as possible. So maybe this will help you in the future when we talk about that. If you like this video, click the like button and subscribe, share with other traders so they can also see what is the main reason why Forex trade and what is the root cause. And that's all for this video. See you next time and happy trading.